With more than 40,000 people infected with the coronavirus and more than 900 deaths as of February 10th, insurers are considering the possible impact. Joining us from Hong Kong are Christie Lee, Senior Director of Analytics, and James Chen, Senior Financial Analyst, AM Best Asia Pacific. Thank you for speaking with us today.
Hello, Meg.
Thank you, Meg.
So, Christie, could you give us the overview of the impact of the coronavirus in China so far?
Sure. The virus is believed to have originated from the city of Wuhan in late 2019. And as of today, February the 10th, over 40,000 confirmed infected cases and the death toll has exceeded 900, which surpassed that of SARS period in 2003. And globally, it has spread to 28 countries, and the WHO declared a global health emergency over the outbreak. Within China, the government has instituted quarantine measures by locking down several major cities and suspending some cross-provincial transportation services in part of China, as well as some public transportation in some cities. And in order to support the affected patients and contain the virus spread within the country, the central government has announced that all medical expenses related to the coronavirus diagnosis and treatment will be covered by the government. In addition, some countries has imposed travel restrictions or travel ban for visitors from China, and there are economic impact to the country itself because of the delayed extended Chinese New Year holiday. And you see that in some industry, like casinos in Macau, has closed down for 2 weeks in order to lower the chance of virus spread from people interaction.
What is the potential impact to the insurance industry?
Overall, the earnings for both life and non-life insurance market is expected to have profit weakening in 2020, especially in the first half, due to low economic consumptions and slower new business growth, as well as lower investment return. On the new business growth side, the new business activities, especially the agency channel, would no doubt be contracted due to extended Chinese New Year holiday, containment measures such as city lockdowns and travel restrictions, also some measures that discourage in-person interactions. So these measures is also going to affect the non-life insurance new business growth, because these are going to affect the new car sales, which is the largest line of business on the non-life market. And on the investment side, the insurers are going to experience challenges from low interest rate environment, increasing credit risk, and volatile equity markets. We have observed for a couple years of increasing credit risk, and due to the economic pressure or a downturn due to the coronavirus, there is potential further increase in credit risks. And on the equity market side, on the market reopen day after Chinese New Year holiday, the China stock market dropped sharply for about 7.7%. The non-life insurance earnings historically depend heavily on investment return to subsidize the underwriting profit margin. So the volatile investment environment is going to add negative uncertainty to their profitability in 2020. However, on the bright side, the virus experience is likely going to improve the general public health risk awareness, and it would in turn benefit the health insurance product sales in long term. China is the second largest insurance market where health insurance penetration rate is still very low. So there is still a lot of good potential in this market.
James, could you walk us through the insurance impact of the virus on a line-by-line basis?
Sure. So a product most directly related to the claims arising from the virus outbreak would be health insurance, naturally. Health insurance can be sold by both life and non-life companies in China. And indeed, this segment has seen significant growth over the past few years. And in 2019, the combined growth in the health segment's direct premiums written reached as high as 30% 2019. And this segment accounts for roughly 6.5% for the total non-life net premiums written, while it accounts for as high as 21% for the life segment. In our view, we think that the claims arising from the virus outbreak would have a relatively limited impact to Chinese insurers' underwriting profitability. Take life insurers as an example. So currently within their health portfolio, roughly 65% of the premiums was sourced from critical illness policies. And for critical illness policies in China, claims because of this novel virus, which is relatively new to the whole insurance industry. So currently, virus-related claims are not covered in these critical illness policies. For the remaining 35% of the health premiums within the life sector, they are mostly related to medical expense reimbursement as well as nursing care. For these coverage, the central government of China, since the early outbreak of the virus, they have announced publicly that they would help to shoulder a lot of the medical expense reimbursement and all the treatment costs for all the infected patients. So from our view, individual policyholders are unlikely to incur significant amount of out-of-pocket expenses by themselves or required to be claimed against insurers, private health coverers. And on the other hand, for life insurance policies, currently given the relatively low fatality rate of the virus, we assume the overall death benefits will not pose significant underwriting pressure to the life insurers. That said, some insurers, they have taken action to echo some of the government initiatives to broaden their coverage for the existing critical illness or personal accident policies to increase the benefits payable to those unfortunately infected patients. But a lot of these broadened coverage would include sublimits. In terms of travel insurance, due to significant increase in flight delays or cancellation in trips, we expect to see an increased amount of claims against the insurers, but overall it depends on the individual policy wordings. Last but not least, in terms of business interruption risk in commercial property insurance, a lot of these policies, the business interruption portion is only triggered when there is a physical loss of or damage to insured property by a covered cause of loss. So for the virus outbreak case, potentially some carriers might have some disputes over whether this requirement is met, such that there is a physical loss or damage to an insured property. But then again, some corporates, especially large ones or global companies, some of them, they have purchased commercial property insurance, which have a coverage extension to also cover epidemic risk.
Would you have any idea how common that is to have coverage for epidemic risk on a business interruption basis?
I would say it's a relatively limited number of corporates or really the multinational companies who might have purchased commercial property insurance with that kind of extended coverage to epidemic risk. Most of those existing policies for SME or domestic companies in China, those commercial property insurance policies would exclude epidemic risk.
And is it possible to say how it's impacted the economy already?
Sure. So the virus outbreak actually occurred only 2 to 3 weeks ago and started to grab some headlines. The situation here in China and in the overall Asian region is still evolving and developing very quickly. So the overall depth and breadth of the economic impact to both China or the larger Asia region, or even on a global basis, is still evolving, and I think it remains to be observed how it will develop. But what we could certain is right now it is already starting to weigh on the economic growth prospects for the region in 2020. Firstly, say there are different governments, they have imposed travel restrictions, both in terms of cross-border travel, or some commute network between cities are cut off, and some large cities are actually locked down to limit the mobility of the population, or to contain the virus spread. So these measures would definitely dampen economic and commercial activities. Some industries are more badly hit than the others. For example, retail, and consumption, catering, hospitality, travel and tourism, and gaming and entertainment, to name a few. And secondly, Wuhan province in China, being the center of the virus outbreak, is actually home to many factories of large-size corporates or multinational manufacturing companies. So, say for example, some European or Japanese or Korean automobile or car makers, these factories, they are subject to suspension, their operations, and a prolonged period of closure to their factories could pose a dramatic and potentially far-reaching effect on the global supply chain. So there are some research out there that some economists, they have forecast, given the virus outbreak, they expect China's GDP will decline from about 6% as of year-end 2019 to below 4% during the first quarter of 2020. However, some are more optimistic. They think that if the virus situation could be contained within next 3 months, coupled with monetary support or fiscal policy support by the central Chinese government, they expect the GDP of China would be resilient and show a strong rebound, and then to achieve an overall close to 6% for the full year 2020. And also to mention as the trade deal. So China has recently signed phase 1 of the trade deal with the US. But I think this virus outbreak has undoubtedly increased the overall economic pressure. In particular, I think this could potentially push up the non-performing loans ratio and overall credit risk in the market. Indeed, we have seen increasing trends in debt defaults by private corporates in China, or even some companies, they are sort of backed by local governments. We have seen an increasing number and volume of defaults. And then with the increasing non-performing loan ratio and with the just central government's monetary easing policies, potentially this could weigh on domestic banks' profitability due to a thinner interest spread. And last but not least, China, the economy is in terms of the size, is quite different from 2003 when SARS hit. So at that time, China economy only accounted for about 4% globally, but 17 years since 2003, right now it accounts for roughly 17% of global GDP. So naturally, there could be some spillover effect of this economic slowdown to nearby Asian countries, in particular those with closer ties to trade or economies with China.
Christie and James, thank you for speaking with us today.
Thank you, Meg.
You're welcome.
For AM Best TV, I'm Meg Green.